To start with what I think I want you to leave with the highlights, takeaway points on fission uranium here during this talk. We have a very advanced asset with a lot of unique advantages. As you'll see, elite economics, and in a leading uranium jurisdiction, that's the province of Saskatchewan. The RRR deposit is shallow, it is high grade, and it is on a very clear path towards, well, it's in the development path towards production, so a near-term producer. And a great deal of major regional exploration potential as well on our PLS property. 2023, we put a lot of effort into building up our development team, and I think now I was very confident in saying we have an extremely strong team. This is a team that can take it through all the development phase that we're on and take the RRR project forward into production. So a lot of uranium experience. These would be, you know, managers in all key positions, ex-Cameco, ex-Orano, operations experience, and I think the right team for leading us forward on the RRR deposit. And of course, with an award-winning management and exploration team, you know, this fission's had an extremely successful track record in uranium discoveries in the Athabasca Basin. The most important, of course, being our RRR deposit on PLS. We are on target to be a producer by 2029, so that's really only about 5 years from now. We should be pulling ore out of the ground on RRR. And I'd say that you know, I think we've been able to take an extreme amount of risk off the table as we move forward through progressing through all the development phases. So there we are. I won't bother you too much on talking about the macro story in uranium. I think you'll have a great opportunity today, particularly at the listening to the panel in the afternoon. There's some great uranium experts on there. Maybe the only point I will make on the overall sector, you know, uranium's had, you know, a great growth profile. It's up some 70% from where we were at this point last year at Red Cloud's conference. I think we were about $55 uranium then. We're about $95 now. And of course, our market cap has gone up accordingly as well. We're almost a double from where we were a year ago. So Fission is close to $1 billion company right now on market cap. As I mentioned, we operate in a premier high-grade uranium district. The province of Saskatchewan is well known, and it's famous for hosting extremely high-grade uranium deposits, and not only ours, but you're going to hear several other amazing projects too as we go through the morning session here. Morning and afternoon session on uranium, and I've always been a huge fan of the Athabasca Basin. I think it's had an awful long history of being able to supply uranium to the world. It's a major contributor, and it's clear with the projects that are out there right now that the next several decades are very well taken care of, that the Athabasca Basin will continue to shine as a premier district. Just for a little bit of context, geographic context of where we're at. So the PLS project is located in the southwest side of the Athabasca Basin, a relatively underexplored area, and hasn't seen the production, but I think it's a pretty safe bet to say that the new generations of mines in the next few years, of course, will be coming out of the southwest side of the basin, and I think with the other discoveries and projects in the area, I think it's pretty safe, again, to say that the western side of the basin is going to be every bit as important as the eastern part of the basin. So there we are. We're located just to the southwest, just outside of the Athabasca Basin proper. We have Highway 955 that runs through the area. This is a basement-hosted uranium deposit. This is a map showing you, or an image showing you, a number of different uranium deposits in the basin. A number of them are called unconformity deposits, which sit at the base of the Athabasca sandstone and at the interface with the crystalline basement below. In our case, we're a basement-hosted deposit. So we sit entirely within the hard crystalline basement rock, so it does have certain advantages. Being in the conventional mining is much more easy and straightforward in the hard crystalline basement rock, and we're very near surface. The top of the Triple R deposit is about 55 meters below the surface. So it's shallow, it's high grade, it's in favorable rock, and it's straightforward path to production. This is an image of the Triple R deposit, and you'll see, I'll just show a video here in a minute to give you a better context of what the property looks like and what the deposit looks like. But essentially, you'll see the mine plan on here where we'll be developing this Triple R as an underground mine, fairly low tonnage, around 1,000 tons a day, and yet producing over 9 million pounds of uranium a year at very low cost. We have a resource of 130 million pounds in indicated and inferred category, with mine reserves of just about 94 million pounds at about 1.4% in the mine reserves and 2% average grade on the overall resource. So if we can trigger the video here, I think it'll give you a pretty good appreciation for the PLS property. So this is the outline of PLS. It's a 31,000 hectare piece of land. Strategically, you have a Highway 955 that runs through the middle of the mineral claims, and you can see there's a picture of the Triple R deposit comprised of 5 high-grade zones all along strike of each other. They occur like pearls on a necklace, the biggest being the main 780 zone, and you'll see the conception of how it will be that we're developing. So it will be accessed by a decline, advancing, and as we move forward into the main R780 zone, you'll see year 1 of production. Basically, we've outlined a 10-year mine life, and it progresses steadily from west to east, primarily the 780 zone, which is still about 75% of the overall mine reserves at this point. We'll be advancing and getting over to the east as we progress further in the years of mine life. There is a lot of potential still for growing the overall mine reserves. The deposit has a 3.2 kilometer strike length along it, and we will be able to bring in other zones into the mine plan as well. So particularly the ones on the west and the eastern flank. And this is giving you a sense of what the overall infrastructure will look like once we do development. So you can see Highway 955 already exists. This is the main access to the larger population areas to the south. So that gives us road access already in place. Pretty minimal disturbance infrastructure. And here you're looking at the tailings management facility that will be putting on surface, so basically a surface tailings management facility, and at the end of the life, we'll of course revegetate and cover it, and all the waste development will be put back underground in the operation. So we should be able to leave a very clean footprint going forward. Now, we completed a feasibility study exactly a year ago, and that was done at a then forward-looking price of $65 pound uranium. Now uranium's trading at $95. So, you know, all these, it was very robust at $65. It's extremely robust at $95, $100, which is the current environment that we find ourselves in. I think the one thing that was true in the feasibility study, and even more so now with higher, better economics, is that this is showing itself to potentially be one of the lowest operating cost uranium operations out there. We're looking at just under $10 a pound OPEX, and all-in sustaining costs under $14 US a pound, so 18 Canadian, and with a payback of 2.5 years. Now remember, that's at $65 uranium, and you can see on this sensitivity analysis here how some of these numbers change. Our base case at 65, we had an after-tax NPV at $1.2 billion, but at closer to $100, where you know, we're just on the margin of that right now. You're looking at almost $2.5 billion after-tax NPV, and importantly, with an annual EBITDA of about $870 million. So extremely healthy, robust economics. Our timeline to production. So on the operations front, we are, so you're looking at the bottom bar there, the darker blue. We're presently in the last part of the front-end engineering design process. So we'll transition out of FEED and into detailed engineering by June of this year. Basically, we're on track on the operations front to be able to begin construction in 2026, and that aligns quite well with the permitting timelines as well. Now, there's two aspects to permitting for us. There's achieving the provincial approval, so the province of Saskatchewan's approval, and also the federal CNSC licensing and approval to build and operate a uranium mine. So at the province level, probably within a week or so, we anticipate submitting our environmental impact study to the province. And with the back and forth that we expect to have with the province, we're anticipating having approval from the province of Saskatchewan on the EA to be able to go forward. That should be in September or so of this year. So about 6 or 7 months out from now, we anticipate the province to be in a position to approve the project. And then on the federal CNSC licensing side of the equation, we had already submitted our application to build a mill and mine at PLS. We submitted that in April 2023. I anticipate that we'll have full approval for construction and operation from CNSC towards the end of 2025. We'll be in a position basically to begin construction, early stage construction at PLS by early 2026 and full construction in 2027, anticipating that, you know, with two years of full construction, so 27, 28, that puts a time schedule for us to be pulling ore out of the ground at RRR by early 2029. These timelines have been very consistent with us. I've been saying the same thing for several years, and no reason at this point to anticipate anything different. So we do remain on schedule and on budget with all our major milestones that we'll be achieving in the very near future. We've, as I mentioned at the beginning, we've assembled an absolute top-notch development team. The expertise in here is as good as anywhere. You know, we're basically assembled a team that can build and operate a uranium mine in Saskatchewan. So this is a snapshot, some bullet point resumes on the key players on the development side. So everything from mine engineers to process plant experts to permitting, that's all covered in our team. We opened an office in Saskatoon last fall, so we've got nine people now based out of the Saskatoon office. And on the exploration front, and I'll talk about some of the exploration that's ongoing and the potential, some of the best uranium geoscientists in the industry working for us, people that have been working for us for the last well over 10 years, and part of our discovery success that we've had over that period of time. So here's again a close-up of the PLS property. You'll see the big structures to look for, these corridors, the conductive corridors. It's the Patterson Lake corridor that right now is one of the most exciting geologic corridors in the Athabasca Basin region. It hosts two world-class deposits sitting very near each other, Fission's RRR deposit, and about 4 kilometers to the northeast, we have NextGen with their Arrow deposit, both development stories, both near-term producers. And we think that the potential for finding additional high-grade mineralization, additional triple Rs, additional arrow-type deposits along the Patterson Lake corridor, we think the chances of finding more of those, you know, we're pretty excited about the possibilities, and hence we have 2 drills currently exploring on the property on the Patterson Lake corridor. So we're testing on strike of the triple R deposit, both to the east and to the west. We're also testing parallel shear structures. It's these shear structures that host the deposit, and we've identified areas where, you know, we think along those shear zones that the potential for finding mineralization is pretty strong. So we've got a program in place. We started the exploration drilling around the mid to 3rd week of January. We anticipate being able to continue up until around the end of March, early April, when you know, basically the spring season starts to come in, and you know, we'll take a break from the winter season. We'll be active again, though, on the property coming back in May and June with the exploration/development drilling. We'll be doing some infill drilling on our R1515 West zone. So the aim on that one will be to convert our inferred resources into indicated, and thus on the pathway to becoming mine reserves. In other words, part of the overall triple R mine plan going forward. So it'll be an exciting year, 2024. It's nice to be back exploring on the ground. We haven't really done so since about 2017, but with the uranium market where it is and the potential on the property, we think now's the right time to be putting some effort into the exploration side. And as I say, also growing the mine reserve, hence looking for additional years to the life of mine on the triple R deposit. And finally, just a little bit of a snapshot on the corporate side of business. We're it's fully diluted right now. We have a market cap of just over $900 million, $146 million in the treasury, so we're very well financed and to get through the entire development phase that we're in, right up to the point of construction. And shareholders, we're probably a equally institution and retail owned company. And of course, you see the research analysts that we have covering our story. Most important, of course, Dave Talbot with Red Cloud. Thank you, David. But you know, we get a lot of eyes on this story. I think it is one of the best uranium stories out there. And I think with that, I think we have a couple of minutes for Q&A, right, Dave?